Bharat Madan is with us. He's a whole-time director and CFO at Escorts Kubota. And we're going to talk about numbers. We're going to talk about the outlook as well. Thanks very much for joining us. Good morning, Prashant here.
Morning,
so, in the fourth quarter, sir, your tractor growth, domestic tractor growth has lagged industry, 23% compared to 35%. You're also guiding for a flattish FY27. You know, we had numbers from Mahindra and guidance from them. They're guiding for mid-single-digit growth. Could you just contextualize this for us? What are you seeing out there in the market? Is it about a specific product? Is it about regions that you operate in vis-a-vis, I mean, a player like Mahindra? Just give us that sense, sir.
So, Prashant, I think first I'll try to respond to your first part of the question, which is in regard to the last quarter numbers growth. So obviously, as you mentioned, so there has been a regional disparity in the growth. Within the last quarter, you've seen the growth in the western part has been very strong, especially the Maharashtra state, which has actually outgrown the subsidy-driven demand which was there. And since we're not very strong player in those markets, that's one of the reasons why we lack the overall industry growth. But in spite of that, the growth has been almost 23% in volume, in this quarter. So I think coming to the second part of the question, and it's to the guidance for the industry going forward. See, so right now we're starting the year with a lot of headwinds now, with this geopolitical scenario, with the cost pressure building up on the input side, and then the initial prediction of monsoon, which is not very healthy. So there are many things, I think, uncertainty, which we don't know how it will perform. And then there's also going to be a large base effect. It will start pitching in from September. Since last year when the GST cut happened, so this impact had started coming in from September month. So first 4-5 months of this year, obviously we are bullish. So there will likely to be double-digit growth till maybe July, August. But after that, obviously many other things will likely start playing out, which is the reason we are expecting maybe second quarter may not see that sort of stronger growth. It may be a flattest sort of quarter, and second half actually can be a bit of degrowth. So which is why overall we look at plus minus 2-3% on the industry for this year.
So you're saying industry growth will be, in your opinion, 2-3%?
Minus 2-3%. So it can be either way, depending on how the second goes here.
And you'd be around that number, around that range, basically.
So we, as a company, should do better than that because we got a lot of product launches which has happened in the last 1 year or so, and there's more in the pipeline within this fiscal. So I think from application perspective, we intend to cover all geographical applications which are required for the tractor space. So that gives us, I think, some positivity for this year. So overall, volume-wise, we think we should do better than industry this year.
So plus, so should be what kind of, I mean, what should we expect?
As we'll expect mid to high single digit sort of growth for the company.
Mid to high single digit growth, volume growth. Got it.
Yeah.
So last year, because you...
Sorry, the monsoon is the monsoon which is below normal. So most of the areas in the south and west are more dependent on rains for irrigation. And since those are not very stronger areas, and if a stronger markets do well, so that will be positive for the Escorts in this year.
Got that. So last year, did you lose market share because you underperformed? And if yes, how much?
Yeah, there's a 30 basis point, I think, loss of market share in the retail side, because we normally follow the retail data only. So which is what we are saying, because that was basically coming because of geographical disparity in the growth, which hopefully in this year will get straightened out.
So you are hopeful of reversing that market share loss of 30 basis points this year. One more question on commodity side. Now, steel prices are up, tire prices are up. You particularly also get impacted on account of the increase in wages in states like Haryana. Overall, what has been the increase in cost, inflation for you? How much have you been able to pass on? I think 1.5%, but would you consider a second price hike?
So we'll be watching the industry. Obviously, if the input pressure remains high, I don't think anybody will be able to absorb. All OEMs will have to take a call and maybe pass it on a bit of that. But since the scenario is not very clear how long this geopolitical situation will last, if it's only going to be a quarter, maybe OEMs will absorb that impact. But if it continues for a longer period, then I think there will not be any option but we'll have to pass it on to the market.
But as of now, with this 1.5% price increase, sir, you've not been able to pass on the entire burden of cost inflation, which is 5-6%. So till there is a second price hike, your margins will be under pressure in Q1?
So this 1.5% increase was the normal increase which we do every year. So this is essentially to take care of the inflation and the normal cost. So obviously this does not factor any inflation on the commodity side, which will be separately tackled. So the assumption normally is any inflation gets passed into the market, and we have seen it happening even in the last war scenario in Russia-Ukraine time in 2022. So the similar thing had happened. So, but like I said, since the demand right now is strong, nobody wants to really touch the demand side as of now because the GST impact is still running. If you end up increasing the prices too much, then that will start impacting the demand adversely, which no one would like to have.
Could you give us a sense of the cost breakup, sir? I mean, the steel, I'm assuming, is a single largest component, right?
It will be a mix of everything actually. Also in tractor typically is casting, forging, sheet metal, which is essentially like the steel, and then obviously the tire tubes, which is again a major component, and electronics. So we'll have a couple of, I think, all metal, steel, copper, aluminium, which will be all coming in together. And now we've seen the cost pressure coming across all commodities now. In addition to the cost on the process side, with the energy costs have gone up, and then the manpower cost has gone up because of this minimum wages increase in Haryana and UP.
On an average, taking all this into account, how much have costs gone up for you when you procure all this now?
So like I said, since the procurement team is still not finalized the discussion with suppliers, but the indication we are getting is it can be anywhere between 5 to 6%. Obviously, it will depend whether we pass it on in one go or it happens in stages, and most likely it will happen in stages in the phases quarter on quarter. So overall, the expectation is even if there's an initial increase in the commodity prices, it will get rolled back by the end of the year. So overall, we try to protect the margin for the company on a full year basis.
13% margin, sir, should hold?
That's the effort for the full year. Assuming the war doesn't last too long, and hopefully we are able to recover it back in the end of the year.
So the effort is 13% margins, protect that. Export contribution through the Kubota channels has reached 67% of exports. What's the medium-term aspiration for this?
So medium-term, our expectation was to take exports to 15% of our top line, and this will remain one of the priority area for us. Though this year we don't expect export will play a major role because of most of the products which we intend to export will start coming in from FY28, and that will be a major boost, which will give to the export numbers. So from next year onwards, we expect the export numbers should do extremely well, and we should be able to double the export numbers in the next 4 to 5 years.
So, just one question. In terms of financing, right, is there any issue at all for tractors? Are lenders becoming a little more cautious at the margin?
No, not at all. I think credit availability has never been an issue, I think, in the market. And then we also started our own captive finance company last year. So it's just completed 1 year of operation. So that's also doing well. But we don't think credit availability is an issue for the agriculture sector right now.
That captive NBFC, I think, has a 100 crore loan book against the 200 crore of equity that you've deployed. So as of now, at least, there is no leverage. What is the target loan book that you have for this captive NBFC by, say, FY27 end?
So board has authorized us to put in 700 crores of capital into the company. Until 700 crores capital, there will not be any leverage. And we expect that book should hit somewhere, I think, in the first quarter of FY28. And that's the time when we look at further leverage, on the books. But by that time, we expect the company will start doing break-even, and then after that, only the leveraging will start.
Hi, Mr. Madan. Good morning. Good to see you. Could you tell us a little bit more about the new upcoming greenfield capacity that's going to be coming on stream? I think the phase 1 is scheduled, right? What is the total capacity that will come on stream? What is the total capex, and how much has already been spent?
We are in the process of acquiring the land actually. So the allotment has been done, and we just made the initial payment to the government. So we expect them to do the groundbreaking ceremony sometime in this quarter.
Okay.
And the construction activity will start. So our idea was to start production somewhere in FY19, 29, FY30, depending on the demand scenario. So we can expedite also a bit. So that'll be the first phase. So in that, we intend to start with the additional capacity for both tractor business as well as construction equipment business. And there'll also be a global part center for the spare parts, which will be created in that capacity as phase 1. This is a phase 1 initially, and then obviously we'll keep expanding capacity in phase 2 and phase 3.
You want to put some numbers to it? Total capex you've lined up for this capacity that comes up on stream in FY29 in volumes as well as in value terms?
So we'd given a I think an indication of about 2,000 crores in the project report, the DPR to the government for phase one, and this will include both tractor and construction equipment capacity. So tractor capacity, I think, will be somewhere around 60-70,000 units initially in the phase one to take care of at least like 3 to 4 years demand. And then phase two again will be similar capacity, which will get ramped up. It will happen in 3 phases, but the idea was to double tractor capacity from the current level. And 60,000, there will be 3 phases for the tractor business capacity build-up, which will happen over there.
What is the current utilization level, sir, and the current capacity before adding this 1.2 lakh?
So we had almost at 75% plus capacity utilization in the last year. So total capacity today is about 170,000 tractor, which can go up to 185 if we stretch a bit. So right now we're still at about 125 or 30,000 sort of unit last year. So hopefully this year, then obviously we'll expedite the greenfield construction activity.
These state subsidies can have a tremendous impact, right? I mean, the subsidies are 30-40% of the cost of a tractor. So what states do can have a meaningful impact on how much companies are able to sell, right? I mean, apart from what you do.
Yeah, that's right. So like you mentioned, the Maharashtra, like last year, has become the second largest tractors volume state, which normally used to be number 4, number 5. So obviously, major boost has come because of this state subsidy. And then obviously the state elections will be a lot of loan waiver scheme which keep coming up, which can also, in some way, help the industry.
Yeah. These are factors external to what you can do is, running the business, but has outsized influences. We've seen this time around.